it's a fresh start, and everybody's looking for how to best position their portfolio to benefit from a potential rebound, or find those sectors that's going to help them outperform the stock market this year.
On this episode of Early Bird, Charles Chi, CEO and founder of StockPick. Charles joins the podcast today to talk about his favorite stock market sectors for 2023, including a look at the current backdrop of the market and why he likes certain sectors this year. If you're an investor looking to stay on top of the latest market trends, then you're listening to the right podcast. This is Early Bird, and I'm your host, Stephen Lerner. Before we get to today's discussion, let me tell you how you can save time and beat the market through Early Bird, a free daily email newsletter featuring commentary about the latest trends in stocks, cryptocurrency, and equity crowdfunding. Early Bird is designed to help individual and non-professional investors stay on top of all of the critical investing trends. The newsletter is 100% free and is sent to your email box each weekday morning. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, today's discussion. All right, Charles, welcome to the Early Bird podcast. Thank you for joining us today. How are you doing, Charles?
I'm good. Thank you, Stephen, for having me here.
Well, thank you so much for coming on the podcast. We're going to be talking about the sectors in the stock market for 2023, this brand new year. Some of your favorite sectors and some of the other sectors that might be challenging we'll discuss as well. But before we do that, Charles, tell the audience a little bit about yourself, about your background. What's a good 30-second Reader's Digest version of your biography, Charles?
Sure. My background, I spent over 11 years at a top Canadian investment bank, CIBC Capital Markets, where I took on a few different roles. And towards the end of my career there, I was an executive director in quantitative investment strategies focused on equity, so stocks, helping institutional investors manage their assets. I managed over $1 billion assets in quantitative equity investment strategies. I'm a chartered financial analyst, and I left my corporate career to start StockPick to be able to be more helpful to retail investors directly.
StockPick looks like an incredible app with video content all about different investments. Real quick, Charles, how can our listeners find that app, StockPick?
Yes, StockPick investing videos is available on the App Store and on Google Play.
Cool. Definitely look it up. It's a fantastic video app, just launched. Charles, here we are, brand new year, 2023. Investors are excited to turn things around. What is, I guess, your favorite sector, if you could pick one, here as we're starting this new year, 2023?
Yeah, that's a great question. And so last year's been a challenging year. And it's a fresh start, and everybody's looking for how to best position their portfolio to benefit from a potential rebound, or find those sectors that's going to help them outperform the stock market this year. Before we dive into specific sectors, I'd like to mention a couple of things that sort of underpin my reasoning for selecting the few sectors that I think will likely outperform this year. So inflation is still top of mind. It's the thing overhanging everything above the market. And in a high inflation environment, I tend to prefer value stocks over growth. And that leads to my picks in terms of the few sectors that I'm more interested in, but a bit more reasoning on why I prefer value. It's high inflation typically attracts higher interest rates. That's a response from central banks to tame inflation. And with higher interest rates, growth stocks with higher multiples, with more of their earnings projected in the faraway future, discounting back at a higher interest rate, they are just not as attractive in a low interest rate, zero interest rate environment that we had for part of the part of from like 2010 to 2020 when we had a sustained period of low interest rates. So given this tilt in style that prefer value over growth, I tend to like a couple of sectors, including financials, industrials, and the materials sectors. So maybe I'll talk about a little bit about each to start.
Sure. I think that's a pretty good thesis. That's a pretty good idea of the pulse of the market here in 2023 about inflation and those higher interest rates that we're facing now. So it's definitely a good understanding of the backdrop we're in. So let's go into those sectors, and we can start with financials if you'd like. Sure.
Yes. So for financial stocks, so banking is quite heavy in terms of weight within financial sector, and then banks, they do well with higher interest rates. Although the shape of the interest rate curve matter too, banks typically prefer steep interest rate curve. To put that in plain language, banks prefer to take in deposit at lower rates, short-term lower rates, and then lend them out at higher interest rates for a longer period of time. So they prefer short-term rates to be lower than longer-term rates. So which is not the case right now. So that's why financial stocks were still down quite a bit last year. Mm-hmm. But just the higher interest rates in general can improve their bottom line. And a lot of financial stocks are trading at very, very reasonable multiples right now. And as investors look for companies with good valuation to buy, financial stocks do look like an attractive choice given their good earnings potential. They can potentially do well in this environment from earnings perspective and their attractive valuation. So that's my first pick in terms of sector.
I think it's a great pick. I think financials, a lot of investors are starting to gravitate towards those, especially those who prefer value stocks. Your next sector, I believe it was industrials, correct?
Yes, industrials. So looking at specifically like within industrials, how because the sectors are defined by some standard setters or like industry organizations. So industrials includes a whole bunch of different things, including like defense, transportation, like heavy machinery. So what's interesting about industrials, they're very tied to, first of all, the real economy, which is still doing reasonably okay compared to the digital economy. So which benefits them, and a lot of these companies are able to pass on higher prices to their customers. And I would like to mention defense is a large part of, has quite large weight in the industrial sector. That's an interesting area as well. With the situation in Ukraine, a lot of countries are likely to increase their spending on defense, which will further benefit this subsector within industrials.
You're absolutely right. I think that's definitely an area of growth. And a big reason why we could see industrials grow in 2023, especially after a year where it's been kind of tough for some of these stocks. I believe your last choice in terms of a favorable sector was materials, correct?
Correct. Yes. So the materials sector includes a number of different types of companies, but two types stand out. They're chemical companies and miners. So in a high inflation environment, if this persists, the miners will benefit because they produce the raw materials that goes into the economy to underpin all sorts of products, whether that's copper or zinc or gold or silver. So So with higher inflation, commodity prices will likely to continue to outperform as they have in the past year, which would benefit commodities producers, which is a lot of them part of the material sector, and chemical companies as well. It's a bit easier for them to pass on higher prices to their customers than some other companies that are more directly customer facing and consumer facing. So I do see this sector had great performance in 2019, 2020, 2021, each year with over 20% return in terms of stocks within the sector. Last year is a little bit of a dip, but I think they can resume strong performance in terms of equity performance.
Good insights. When we return, we'll hear from Charles about stock sectors to avoid in 2023 and his advice for investors. But first, let me tell you how you can become a more informed investor through Early Bird, a free daily email newsletter. Early Bird has commentary on the latest events and trends in stocks, cryptocurrency, and crowdfunding. With Early Bird's daily weekday email, investors can quickly stay on top of the trends and beat the market. Subscribe to Early Bird for free at www.earlybird.email. Once again, that's earlybird.email. And now, back to today's discussion. So, Charles, today we're talking about the stock market in 2023. You've done a great job so far talking about some of the sectors that you think are ready to roll this year and giving us the backdrop of some of the economic challenges in the market. I want to sort of change the path a little bit and talk about some of those stock sectors that may still have challenges in 2023. What are some of the sectors that you think are poised to be in a pretty rough spot for 2023?
I think, so if we take a step back, so what were the sectors that really outperformed before the bear market? It was basically anything technology or technology related. So I would include the technology sector, the consumer discretionary sector, which has since changed quite a bit. It used to be about companies making products that consumers buy that are not necessities. But since the addition of Amazon and Tesla into that sector, they now together represent about 40% of the sector. And then they trade more like technology stocks with high multiple and depend significantly on growth. The communication sector is also likely to see challenges this year. Again, they're no longer the sleepy sort of telecom or traditional communication companies that we think about. So since the addition of Meta and Google into the sector, now the more technology-focused part of the communication sector, including Meta, Google, they account for over 40% of the sector. So technology, consumer discretionary, and communication sectors will likely to still face challenges from a stock performance perspective because of their association with high growth investing style, which will still be under pressure this year, given the high interest rate, and I think people will more and more shift their focus to value this year.
It's an interesting approach that you have there, the value over growth. Certainly, a lot of those tech stocks have been beaten up in 2022, and as the year ended, several of them in the tech and communication sector announced layoffs, cutting down their staff, concerned about economic headwinds for sure. I want to play devil's advocate for a second about the tech sector in 2023. There are some analysts who say that the tech sector is ready for a comeback. A lot of the damage is already priced in. There have been some analysts who say that next year there could be a lot of high growth IPOs on the way in tech, certainly more than in 2023. So what do you think about those people that say that big tech is ready for a comeback this year in 2023?
I think in terms of their earnings or their fundamental performance, they may be ready for a comeback because a lot of these companies, it's different from the dot-com age. Many of these tech mega caps are solid businesses, and then they can produce very good fundamentals this year. But from an investor philosophy perspective, it takes a bit of time for investors to be bullish on a sector that took such a big hit last year again this year. And the rotation in investing style can be quite long. For example, growth outperformance over value from 2017, even a bit earlier than that, to the early parts of 2021. That's a few years. Right? It's a few years. So I tend to think this rotation into value, which already seen last year in 2022, the Russell 1000 value index outperformed the growth index by 20%. So that's a significant outperformance last year. I think this will tend to continue. I think this can continue for a couple of years. So I agree with you. There can be a big comeback in terms of their fundamental performance, their earnings, their revenue growth. But in terms of stock performance, I think the relative performance to the market, that's going to take some time.
Overall, 2023, it looks like, Charles, we might be heading to a recession. Is this something that investors should consider when they're making picks this year? The fact that there's a good chance, at least according to experts, that the market could be in turmoil for the full year?
So yes. So with that, a big consideration, investors should consider adding to their defensive sector holdings, which are the traditional utility, healthcare, and consumer staples. But these sectors already performed so well last year, so it's unclear whether their relative performance to the broad markets anywhere between plus 15% to 20%. So it's unclear whether this kind of outperformance can continue. So I think the sectors that I've mentioned at the beginning, financials, industrials, and materials, they have there's very good reason for them to outperform the broader market this year.
Makes sense. Charles, we're not financial advisors. I always tell people speak to financial advisors for they're making stock picks. But overall, 2023, new year, what's the biggest piece of advice that you could offer retail investors, especially those who are new to the market this year? What is the single most important advice that you might suggest for those investors?
My suggestion would be to not to try to time the market, because I'll point out one interesting stat. So looking at the past 30 years, the 10 biggest single day gains of the S&P 500 index, they were all either during the bear market or within 15 days after bear market ended. So there's significant risk to try to time the market. A better way is just to tilt your portfolio, keeping your overall asset class allocation, but just tilting your, for example, equity allocation slightly to express your view on the upcoming, on this year and on future years. So that will be my biggest advice, to not to try to time the market too much with asset allocation decisions.
Great advice. It's not about timing the market, it's time in the market. I think that's the old saying for that. Charles Chi, thank you so much for coming on. the Early Bird podcast today to talk about the stock market sectors for 2023, the ones you like, the ones, and as well as the ones you think that it might be challenging. Before we wrap up the podcast, Charles, I just have one final question, and it's the most important question for today's discussion. That question for you is, what is your favorite time of the day and why?
That is a great question. My favorite time of the day is in the morning. I get my daughter ready to get her ready for to drop her off at junior kindergarten. It's quality time spent with family. So that's my favorite time of the day. And I in the meantime, I get to think a bit about what I need to do today, finalize sort of my plans, my to-dos, and think about how I approach, the market, the business environment. So I just get a lot done and a lot get to enjoy the time with family as well in the morning.
Mornings are great. You are a morning person, it sounds like. That's awesome. Thank you again to Charles Chi for sharing your insights on stock sectors. And thank you to everyone for listening to today's discussion. We'll be back next week for another episode of Early Bird. Have a great day.